Hi, I'm Jason Brooks, the president of Invico Capital Corporation.
And I'm Allison Taylor, the CEO of Invico Capital Corporation. We're here today to talk about the 10-year anniversary of the Invico Diversified Income Fund.
Can you share some insights into the journey and impactful moments of Invico Diversified Income Fund over the past decade that have contributed to its growth, from humble beginnings to almost $500 million in assets under management?
We've had many ups and downs over the past 10 years between the economic and commodity cycles and a global pandemic. When we started this fund in 2013, interest rates were very low at approximately 3% compared to the current interest rate environment at over 7%. In fact, we've had 10 interest rate hikes over the last 18 months alone. One of the major contributors to IDIF's success was the original energy working interest investment in 2014. We've continued to add to this position over the past 10 years and have energy assets on both sides of the border today that provide ongoing significant cash flow to all investors. Learning from our mistakes has been an important, if not difficult, decision that has been made over the tenure of the fund. It's not always easy to enforce your security and take possession of assets in the loan side of the portfolio. However, sometimes it's what needs to be done. Over the past 10 years, many people have asked us, what's the worst thing that could happen? How about a global pandemic with a commodity crash? The pandemic was a stressful time for everyone, and a large portion of our success over that period of time was to continue to provide support to our clients. We had to make long-term decisions over a short-term stressful time. This support enabled our portfolio to be successful in the long run.
IDIF has garnered significant attention and accolades for being one of Canada's best private debt funds. What factors do you believe have contributed to its consistent success and recognition in the industry?
There is a lot of key attributes here that need to be touched on. First of all, conservatively managing the product to withstand the economic cycles. No material debt, careful underwriting to focus on the value of collateral, and with our energy assets, we focus on low cost, predictable operators, and quality organic growth that is very economic to our unitholders. In addition, investing in areas without significant competitive tension has been a key attribute of our fund since inception. Less competitive deals give better returns. Mid-market companies that are not well followed are often where you can find better opportunities that aren't as competitive to put capital out for us. Also, ensuring that we move quickly to meet clients' needs has been a continuing competitive advantage, as often securing capital can distract a company for 6 to 12 months. Our typical deal cycles are 30 to 60 days. Lastly, our internal restructuring capability is critical when things don't go according to plan. To get the tenure that we've had over 10 years has required tough decisions, as Allison mentioned, and being able to handle that ourselves internally has been one of the keys to our success.
In 2022, IDIF achieved record returns. Could you elaborate on the key investment strategies or decisions that played a crucial role in driving performance during that year?
2022 was a record year for IDIF. We were able to pay 4 additional distributions above and beyond our base distribution rate. The energy assets were a major contributing factor to the returns, and we had significant cash flow given the robust commodity price environment. The debt portfolio also contributed to this performance as we pivoted our underwriting to a variable interest rate environment to capture the rising interest rate environment. These wins remain at our back as we move through 2023.
As one of the longest tenured private debt funds in the market, how has IDIF adapted to changing economic and market conditions over the years while maintaining its strong performance and delivering value to investors?
Importantly, ensuring we maintain an attractive yield with our investment above the other options in the market is very important to maintaining and growing our investor base in this environment. Case in point, our current hurdle rate is set at 9%. Also, most importantly, sustaining distributions and generating cash well above what we're paying out is critical to the longevity of this fund. We have been maintaining our cash flow generation well above our distribution payouts. Also, lastly, and most importantly, maintaining a competitive level of management fees is important. It ensures that our investor return remains strong over all cycles. We are very competitive with our peers and have one of the most competitive management fee structures in the alternative space. This has resulted in strong performance versus our peers. At the Canadian Hedge Fund Awards, we have placed either first or second in 1, 3, and 5-year returns in our category.
Building and managing a successful investment fund requires a keen understanding of risk management. Could you share some insights into the fund's approach to risk management and how it has contributed to its positive performance and resilience over the past 10 years?
Risk management has always formed an important component of our underwriting in IDIF. On the loan side of the portfolio, our approach has not changed over the past 10 years, as we've always been focused on the key attributes of asset collateralization, cash flow coverage, and management capabilities when evaluating a loan investment. On the energy side of the portfolio, we have expanded our risk management over the years to implement a commodity hedging strategy as our energy assets have expanded over the past few years. Also, we have implemented a foreign exchange hedging strategy as our exposure to the USD has expanded over the past few years and the markets have experienced significant volatility.
Can you elaborate on how Invico's majority female workforce and having a female CEO and portfolio manager helps serve as a market differentiator and contributes to the firm's success?
Having a diverse team, both on a gender and ethnic diversity perspective, has always been a founding principle for Invico. In fact, our gender diversity has been significantly higher than our peers since we started the firm back in 2005. We strongly believe that diverse teams are more powerful as they bring different perspectives, approaches, and solutions to problems than you would otherwise see.
Looking ahead, what are some of the key goals and strategies that IDIF and the team have in place to continue the fund's growth trajectory and uphold its reputation as a top-tier investment option in the alternative investment space?
Most critically for Invico is the quality of the people that we have. And I can honestly say we have the deepest team with some of the top-tier talent that we've ever had, and that will continue to grow as our business has. We don't follow the herd, and we don't chase what's trending out there. There's lots of carcasses on the road over the last 10 years. We're not one of them. Our strategy is hard to replicate, and we're going to continue with what got us here. Also, pace of play. We don't need to be the biggest. We have had continued growth and sustainability over the last 10 years. Our first priority is stable and attractive returns, and a lot of the rest of this business, if you achieve that, will take care of itself. And I know this sounds cliched, but after 10 years, I must be honest, we are having fun and we're passionate and we enjoy what we do. We're going to keep it up for at least another 10 years, and thank you for your support.